Hey everyone, it's Joel here from Wally Watch USA. Let's talk about something that's been quietly eating in our budgets. The true cost of owning a car. Not just gas, not just repairs, but the slow, steady climb hidden in plain sight. So today we're going to be breaking down why owning a car keeps getting more expensive. What's quietly fueling these prices hikes? And most important, how to take some control back. So let's dive in. When that email popped up, I expected a small bump, maybe $5, $10. Nope, a full 12% increase. That's like adding another streaming service or a week of groceries every single month. And I know a lot of you watching have seen this same thing. You check the total, then double check the car, the driver, and the coverage. And guess what? Nothing changed except the price. So what's really going on here? It's not just inflation. It's something deeper. The ecosystem around the car itself. So here are the three big drivers behind that spike. First, repair cost. The average car repair now costs about 36% more than it was 3 years ago because our cars have become rolling computers. A simple bumper top isn't simple anymore. It's a radar sensor, lane assist cameras, recalibration. What used to be a $400 fix can now hit $2,000. The second thing, the climate risk. Floods, hail, hurricanes, even wildfires. They're all causing more total loss claims. And insurers are paying out more. And guess who's covering that? Us. The third will be tech complicity. Every upgrade adds risk and cost. Adaptive cruise control, electric vehicle batteries, all digital dashboards. Great features, but expensive to repair or replace. So when insurers crunch their numbers, they're not thinking about your clean record. They're thinking about how much it costs if your car sneezes. Now, take a look at this map. See that deep red down south? That's Florida. The average full coverage premium, roughly $2,694 a year. Compare that to places like Maine or Vermont, where it's closer to $900 to $1,000. Yeah, it is the same country. Different risk, different cost. And here's the twist. You don't even have to move for your rate to change. Neighborhoods growth, claim patterns, storm frequency, those can shift your zip code's rating overnight. One storm season and suddenly your insurer says, congratulations, you're high risk. I live in Florida and I didn't move an inch, but my zip code apparently did. That tells you how dynamic these costs have become. So let's talk about solutions. 5 real moves that actually made a dent for me. Number 1, compare carriers. When I write fresh quotes, the gap between companies was over $400 a year, the same coverage. So loyalty doesn't always pay. Number 2, adjust your deductible. If you can afford a little more upfront after an accident, raising that deductible can drop a monthly cost. Number 3, ask for discounts. Insurance won't always volunteer them. You have to ask, like low mileage, bundle home and auto, telematics, student, safe driver, stack them up. Number 4, review your vehicle's risk. Some cars cost more to insure simply because of their parts or theft rates. Number 5, plan ahead if you live in a high-cost zip code. Budget an extra 10 to 15% cushion. Because those average, they rarely go down. So these 5 steps save me about $380 a year. Not life-changing, but enough to feel like I'm doing something instead of just accepting the hit. Now let's switch gears, literally, to something that affects us every few days, gas. According to Kimbler's Energy Outlook, the nation average could dip close to $3 a gallon for this season. Finally, a little breathing room. And that's because the global picture is shifting. and not in the way most people expect. Three reasons. First, global demand is slowing. Factories and shipping are cooling down worldwide. Less movement means less oil burn. The second, supply is strong. So despite the tension production for the US, Brazil, and the Middle East in meetings, even exceeding expectations. The third, a mild winter forecast. Warmer weather means less heating demand, which usually pulls from the same reserves. All that points to lower pump prices, but, and this is the tricky part, those same trends can flip in weeks. One refinery fire, one hurricane, one tariff decision, and that little downward arrow turns right back up. The lesson isn't to predict, it's to stay aware. And that's where tools like Gas Buddy and AAA Gas Price Finder comes in. You punch in your zip code, and it lists the cheapest stations near you, and usually updates every single day. So last weekend I drove from Orlando to Tampa, and by checking the app, I saved about 11 cents a gallon. It's small, sure, but multiply that over a year, that's groceries, not pocket change. The point is control what you can. You can't set global oil prices, but you can choose when and where you fill out. Now let's talk about something invisible, the hidden costs sneaking into your repair bills. A friend of mine, George, runs an auto body shop. And he told me, Joe, I'm waiting 6 to 8 weeks for parts that are used to come next day. Think about that. A bumper, a sensor, a headlight, back order for months. While that car sits in the shop, the owner's paying for rental or missing work. The shop's paying for storage too. And insurers, they're paying extended claims, which cycle back into next year's premium math. It's all connected. When supply chains tighten, your wallet loosens. So before buying or trading a vehicle, check parts availability. Electric vehicles, imports, and high-tech models often have longer wait times. Ask your dealer or mechanic, if I get into a fender bender, how long until this can be repaired? That one question could save you weeks of frustration and hundreds in cost. So let's zoom out. Between insurance hikes, gas changes, and repairs delays, that real story is the cost of mobility itself is changing. We used to think of cars ownership as a freedom. Now it's balancing act between protection, prediction, and prevention. But you're not powerless. If you take anything from this video, make this. Review your insurance, compare your options, track your fuel costs, ask questions before your next car. And most of all, share your story. Have your premiums gone up? Are you waiting on a repair that's taking forever? What did you do that helped to cut the cost? Your comments might be a tip that helps next person watching this. So hit the subscribe, drop a like, share this with someone trying to make sense of their car's expenses, because we all trying to keep our wallets steady in a world that keeps shifting gears. And thanks for watching. This is Joel with Wallet Watch USA. Until next time, keep your eyes on the road and your wallet under control.